Welcome to the Deep Dive.
Glad to be here.
We've got quite a stack of sources today. Lots of recent interviews, reports, basically looking at tech companies, what's happening in the markets, and, how government policy is mixing things up.
Right. It's a pretty broad mix covering everything from specific company moves to the bigger economic picture.
And our mission really is to sift through all this, pull out the key insights, maybe some surprising bits, and figure out what's actually driving the tech world right now.
Yeah, what's the real story behind the headlines? We're talking OS changes, AI infrastructure, economic forces. It's all connected.
Exactly. So where should we start? Maybe with Apple. There's a report about a potential big change in how they name their software.
Yeah, that caught my eye too. The sources suggest Apple's planning to ditch the usual version numbers, iOS 18, macOS 15, that kind of thing.
Oh, what are they moving to?
The plan reportedly is to use the year 26. So think 2026 and apply that across all the platforms. iOS, macOS, watchOS, everything.
iOS 26, macOS 26. Okay. Why the change, though? What's the thinking there?
Well, the main reason cited is to reduce confusion. The different platforms launched at different times, so their version numbers are all over the place.
Ah, I see. So it's messy having iOS 18 alongside, say, macOS 15.
Exactly. Aligning everything to the year 26 is simpler. It's kind of like how car companies use the model year. It signals, a unified release cycle, a single ecosystem.
That makes sense. Less about where each OS started and more about where they are together now and going forward. The sources also mentioned a visual overhaul.
Yes, apparently a pretty significant visual refresh is planned too. Again, across all the platforms.
Aiming for consistency.
Precisely. Making everything look and feel more cohesive, so moving between your iPhone, Mac, Watch.
Yeah.
It's all visually unified. And interestingly, the sources note this comes after Android announced similar moves.
So maybe a broader trend towards visual harmony across platforms.
It seems like it could be.
Okay, and what about the elephant in the room for Apple AI?
Right. The sources definitely mention generative AI plans, but it sounds like we should temper expectations slightly for the immediate future.
How so?
Well, expect smaller, helpful AI features integrated soon, but the really big, ambitious stuff, like a truly conversational Siri that can handle complex, multi-step tasks.
Yeah.
That's reportedly still a bit further out. So the rebrand and the visual stuff seem more near-term, while the AI revolution might take a little longer to fully arrive from Apple.
Got it. Okay, so moving from the user experience stuff to the tech underneath. That brings us nicely to data. The sources really highlight how critical data quality is for Gen AI.
Oh, absolutely. There's an interview with this Informatica CEO talking about their partnership with Salesforce, and this point is hammered home.
Right, you can have the best AI model, but if the data's bad.
Garbage in, garbage out. Exactly. The AI is only as smart as the data it learns from and uses. So getting that data right, high quality, well-governed, is essential for AI you can actually trust.
And that's the focus of this Informatica Salesforce deal, helping companies get that right data.
Precisely. It's about combining Salesforce's scale and enterprise reach with Informatica's deep expertise in managing data effectively.
And Informatica handles things like ETL and MDM. Maybe break those down quickly.
Sure. ETL is extract, transform, load, basically getting data from different places, cleaning it up, and putting it where it needs to be. MDM is master data management, creating that single reliable view of key things like customers or products.
Okay.
So their platform covers all that, plus governance, metadata management, quality checks, the whole pipeline needed to create that trustworthy data foundation for Gen AI.
So Salesforce brings the customers, Informatica brings the data plumbing.
That's a good way to put it. And importantly, they address security concerns too.
So that's huge for enterprises.
The architecture allows deployment flexibility, private, hybrid, or public cloud. But crucially, the sources emphasize keeping enterprise data ring-fenced. It's not just thrown into some public lands, as the CEO put it. It keeps the data secure.
And is this just theory, or is it actually being used?
Oh, it's happening now. Informatica mentioned they've launched new Gen AI agents in cloud tech, and hundreds of enterprises are already using it. So it's not just future talk, it's deployed and working.
Okay, so data foundation is key. Let's shift to the hardware, the compute power. The sources contrast Grok and NVIDIA, which is interesting.
Very interesting. Grok, for instance, is presented as really laser-focused on AI inference.
Which is the running of the model, not the building of it.
Exactly. Taking the trained model and using it to generate answers or predictions, that's inference. And Grok reportedly claims a major cost advantage there.
Lower cost per token, right?
Right.
Even including all the overhead.
Yeah, the sources suggest that when you factor in everything for running inference on NVIDIA GPUs, the optics, the power, the data center, Grok's total cost, including their chip, might be lower for the same output.
Wow.
That's a big claim if it scales.
That's definitely compelling. What about deployment speed?
Grok emphasizes being fast, the build fast approach. They cite a deal in Saudi Arabia operational in just 51 days from signing. That's positioned as a contrast to the potentially longer timelines for huge NVIDIA-style infrastructure builds.
I remember seeing that quote attributed to Jensen Huang, something like, you trust NVIDIA for the huge multi-year projects, but Grok for faster, smaller ones.
Yeah, that quote captures the perceived difference well. Grok for maybe quicker inference deployments, NVIDIA for the massive long-haul AI factories, different niches, perhaps.
Now, this gets tangled up with geopolitics, particularly China. Grok seems to have a very clear stance.
Extremely clear. They've decided very deliberately not to do business in China. No chip sales, blocked API access.
Why?
They frame it as purely business concerns about unfair competition, intellectual property theft, reverse engineering. Just too risky, in their view.
And there are deals in places like Canada and Saudi Arabia that build, operate, transfer model. Does that relate?
It seems so. By running the systems initially, they can control access, reassure governments like the U.S. Commerce Department that the tech and data aren't leaking indirectly to China through these sovereign deployments.
Okay, so Grok draws a hard line. What about NVIDIA? China was a massive market for them.
Yeah, and Jensen Huang's comments, per the sources, are really quite complex. He apparently praises the vision behind U.S. tariff policy, trying to boost domestic manufacturing. But he also flat out acknowledges it kills this company's access to China, which was like 20% of their revenue. That's significant.
So what's the fallout in China from these restrictions?
The reported consequence is exactly what you might expect. China's doubling down on developing its own stuff. Companies like Huawei are apparently making serious strides with their own AI accelerators.
Getting close to NVIDIA's performance.
Some reports suggest they're becoming quite formidable, maybe comparable to some of the NVIDIA chips that are restricted, like the H200. So the policy might be pushing China to innovate faster domestically.
But is losing China hurting NVIDIA badly right now, given the overall AI boom?
The consensus in these sources seems to be, not really, not yet. Global demand for AI compute is just described as insatiable, exponential.
So they can sell everything they make elsewhere.
Pretty much. They have enough demand and they can ramp up their new Blackwell chips. So they can absorb the China hit for now. But the sources do add a caution. It could become a drag some years from now if China keeps advancing and the restrictions stay.
Despite that, NVIDIA's overall performance sounds incredibly strong, according to these reports.
Oh, absolutely. Earnings blew past expectations, not just GPUs, but networking, whole data center solutions. Analysts are raising price targets because this demand seems set to continue expanding into healthcare, finance, industry, sovereign AI, everywhere.
And there's another layer to this competition, something about standards.
Right. And analysts mentioned the standards battle. It's not just about the fastest chip.
What does that mean? A standards battle for AI.
It's about whose whole tech stack, the hardware, the software frameworks like CADA becomes the dominant platform everyone builds on. The argument is it's strategically vital for U.S. companies like NVIDIA to win that battle.
Why? Global influence.
Partly that, yes. Setting the standard expands their market everywhere. And potentially, if they are the standard, it might even offer a path back into markets like China eventually if policies change.
Fascinating. Okay, let's zoom out even more. These sources also hit on the broader economic climate and policy stuff, like tariffs and the Fed.
Yeah, and the U.S. tariff situation is definitely portrayed as a big source of uncertainty. Robert Kaplan from Goldman Sachs called it a top concern for clients.
Because it disrupts everything.
It disrupts supply chains, yeah. Big companies might adjust in, say, 6 to 12 months, but it's much harder and costlier for smaller businesses. And then there was that court ruling adding more confusion.
Right, the one saying some previous tariffs were illegal.
Exactly. And the current administration reportedly plans to appeal, maybe even to the Supreme Court, so it's all still up in the air. Creates this black cloud, as one source put it, over business planning.
And that uncertainty hits big tech like Apple and Amazon particularly hard.
Correct. Because their supply chains and sales are so global, the sources say their long-term fundamentals look great, but this policy instability makes near-term investment decisions really tricky.
How does all this tariff talk feed into the general economic outlook from the sources?
Kaplan's take seems to be expect sluggish growth this year, but probably not a deep recession.
Why not?
Partly because fiscal policy might end up being more expansionary than thought, and the job market is still pretty tight. But tariffs themselves, they tend to slow growth and push up prices. Inflationary.
So with that backdrop, what's the Federal Reserve likely to do?
Patience seems to be the watchword. They're waiting to see how tariffs, fiscal policy, all these things shake out.
So maybe fewer rate cuts than the market was hoping for.
That's the sense from the reports. Maybe just 1 or 2 cuts this year, far less than expectations were at one point. The Fed itself reportedly doesn't know for sure what comes next because of all the policy uncertainty.
Too many unknowns with tariffs, taxes.
Exactly. So they're likely staying data-dependent, meeting by meeting.
The sources also mentioned a specific focus on the 10-year bond rate.
Yes, because of the large U.S. budget deficits, apparently near 7% of GDP, and not expected to shrink much.
And that pushes long-term rates up.
It puts upward pressure, yes. Makes it harder to bet on long-term bonds when there's so much government borrowing happening. So for many investors, that 10-year rate is kind of more important to watch right now than the short-term Fed rate.
Got it. And lastly, Elon Musk came up in relation to some of this policy discussion.
He did. Reports say he stepped back from that DOGE advisory role, Department of Government Efficiency. Seems to signal a refocusing back onto Tesla and SpaceX, especially with Tesla facing more competition.
And speaking of Tesla focus, they mentioned a specific date for the robotaxi.
Yeah, June 12th in Austin. That's the date given for the first public unveiling and factory-to-customer delivery.
Giving a hard date to boost confidence, maybe? Despite the skepticism.
That seems plausible, showing concrete progress amidst the noise. Apparently, they've been testing driverless cars in Austin already, with engineers present. Meanwhile, his DOGE effort reportedly did lead to sharp reductions in agency sizes.
Wow. Okay, so we've covered a huge amount of ground. Apple's OS strategy, the absolute necessity of good data for AI, the fierce hardware battle with Grok and NVIDIA, the geopolitical layers, and then the whole macro picture with tariffs, the Fed, deficits.
It really is striking how it all ties together, isn't it? You can't really understand the AI chip race without thinking about data quality and trade policy. You can't look at Apple's plans without considering the broader economic headwinds. It's all interconnected.
Which leads us, I think, to a really interesting question for you, the listener, to ponder after hearing all this. In this incredibly fast-moving world of AI and tech, what's going to be the most critical factor for success in the coming years? Is it the raw speed of innovation? Is it getting that data foundation absolutely right? Or is it navigating the choppy waters of global policy and economic stability? Which one will be the ultimate differentiator?
That's a great question. Definitely something to think about as all these stories continue to evolve.
Absolutely. Well, we've certainly unpacked a lot from this stack of sources today. Hopefully, connecting some of these dots has been insightful for you.
Thanks for joining us on this deep dive.